I think not. Just don't try and compete with the big money machines, the funds, the hedge funds, the professional traders, the institutional traders. So what do I mean by that? For example, these people have got microsecond, low latency connectivity. They definitely know the news before you do, even though the news is released at some instant at 1:30. They actually know it before you do. They're already priced it in, they've already made their money and go. You can't compete with that. So just avoid trying to compete with the areas in which you've got no chance of doing better than them. There are areas where they actually have no advantage over you, and why not go for that, where you're really on a level playing field with them. I think that the areas where you have no disadvantage is if you're trading exchange-traded products, so the price is transparent in the security. If you trade with a daily chart, you're seeing exactly the same high and low and close and volume as any institution, so it's nothing secret about it, and so you can see what he can see. And so if you operate in that longer time frame, for example, all his advantages have gone. Actually, you've got many advantages now that he hasn't got. You can learn to trade possibly better than an institutional guy who hasn't got any time to learn. You can study, you can do that. You can also not trade. It's not an option for many of these people. They must trade, and you can see that it's not the right time and I shouldn't be doing it. Also, being smaller than them has a lot of advantages too, because for them, being very large means that by the time they start buying things, they're starting to move the thing itself. You're most likely, if you do buy things, you won't be moving the market at all, and so you can buy strength and breakouts and things like that, but an institution has to predict the breakout, which is a very risky thing to do, in order to start buying before the event itself. I think not. First of all, what people think is manipulation of the markets, things like short squeezes and dark pools and things like that. They're not. They're just factors of the market. It is things that happen. That markets go into backwardations and things like that. It's not manipulation. It's a short-term, nearby shortage has caused that. And really, does this affect and impact detrimentally to the retail investor? No, it doesn't. Usually, it's the institutional investor that's on the wrong side of these things that makes them appear so bad. The manipulation of the price in the shorter term is again, I think, is not possible really these days. There's too many eyes on it. It's the reputational risk for the institutions is too great. The fines are enormous. They will get caught. And so it just generally doesn't happen. You may get rogue traders, but internally firms really are very conscious of that, and a bad apple can ruin a whole bank. This is really something that private traders can do. Now, they can't be high-frequency traders and low-latency traders. The cost barriers are too great for them, but they can become systematic. Systematic just means rule-based. And there are plenty of very good programs out there which start at free, and even very good ones like MT4 is a very popular one in the retail market, and it's a very good program, and there are better ones which you pay more for, and it's a lot to do with the flexibility and the data and processing power of it. But all of these programs are very good. Now, what they allow you to do is to develop a method which you have tested and finessed and said, does this work, or it would work better if I did this, and if I changed the way I operated the stop like this, then eventually come to a conclusion that if I continue to operate in this way, I will, in the long run, make money if I do that. And this will give me the discipline to do it, take away all the emotion. That's just a correct thing to do. If you don't make money, it wasn't your fault, it was the fault of the program that it wasn't correct, but it wasn't to do with you. And mostly people stop doing things or get worried and say, oh, it's always me, or I can't do it right, or I've lost money 5 times, so I'm not going to take this next trade and skip the next one, and things like that. It will stop you doing all that kind of thing. So you've got the discipline, the confidence that comes with that, and I'm certain that is the right way to do it and something that's achievable for a retail person. I think using technical analysis and systematic trading is something you can do, one can do, and you can do this as well as or better than any institution. So you're at no disadvantage unless you try and compete in the very short time frames and very difficult and strategic type of trading which they specialise in. You can't do it better than them. And you haven't got the money, the power that they've got too. But they're at no advantage over you if you trade systematically in the markets. And you've got you can do it better than them. You've got time, you can study, you don't have to do it, you don't have the problems with size that they have, and that creates considerable problems for them. And so you can you can take trades which they are passing over because they're not. It just can't be done for them, but it is a profitable trade for you. And the other thing, the second thing that I would suggest is, if you can, I would try and get somebody to help you. This is not an easy thing to do, particularly for a retail person, to find somebody who's willing to spend time, who's got experience and can coach you. Like any sportsman, they need a coach who's going to push them on and correct them and study them and be brutal but knows how to do it. But he's not the sportsman that you are, but he's there to help you and to watch and to criticise. And try and find somebody like that. Beware of all the charlatans there are, the sort of gurus. Plenty of people pretend they're that thing, but really it comes with time and experience and background of people, and try and go for those kind of people. I do this kind of work myself in the institutional area because they have problems too. They have off-form traders that they want to see what's wrong with those traders and people that they're bringing through the system, and I've worked with those people too. But yeah, they are available at a retail level, not easy to find, not cheap. The good ones, inevitably, you're requiring a lot of their time, valuable time, and they are experts. So you don't expect them to do that for free. It's quite interesting that I think that in many occasions the wholesale market, the institutional market, is often trading against the retail market at the very same moment where what one is buying, the other one is selling. For example, if you think about a support line, for example, you might think that, well, this support line may hold. Also, the institution may think this support line may hold. The support may be the day's low, the month's low, the pivot low, something like that. They're seeing the same thing as you. Now, how might you react to this? Well, you want some confidence. So you might see that the approach to the support line is weakening, so the candles are getting smaller and the bodies are getting smaller and the volume is lightening. And then you have a nice white candle, which gives you the feeling that we've reversed up and the close is now well off the opening, and so it's turning. And you might, as a retail trader, say, if it follows through on the next candle, I'm going to buy and enter the market. I've got a very obvious place for a stop, which is below the low of the recent candles, and that's where I'll enter there. Now, what you don't realise is that the institutions, because of their size, they could never do that. They couldn't wait for that late stage. If they start buying at that point, they'll push the market away from them, and they won't have got enough size on board, enough position on board, and the market will have already run away. So they've already had to have participated. So as the market comes and starts to look as though it's going to hold and not fail, they will be the buyer. Actually, they caused the white candle that you're now seeing as the trigger, and they've already started to buy. It's risky because they're buying early, they haven't got the confidence that you've got, but they have to participate earlier than you, and so they are buying, and they will possibly be selling, having already bought at the very moment that you are buying. And so they are the wholesale participants, and you are the retailers. Use your advantages and certainly don't be drawn into and seduced into areas where you are at a clear disadvantage. And these areas are you haven't got size, you cannot trade faster than institutions. And so go where you've got an advantage over them, which is more in the intermediate term, doing technical analysis, become systematic. You can do all these things as well as they can do it. They may have sophisticated algorithms for short-term trading and high-frequency trading and machine learning algorithms, but they're all gravitating towards this shorter time frame. Just leave that alone, let them have that. But go to an area where, if there's a trend in the market which is driven by the demand of the security, the fundamentals of security, that's what's moving the price. They can't change that. It will be the same for you as it is for them, and you'll be able to see it as well as they can see it. Maybe you could even see it better because you're working under less pressure than they are, and you're got more time and you're doing it more slowly than they are. So go where you've got your own strengths and avoid the areas where you're at a clear disadvantage. It is for me. I'm not saying swing trading is a sweet spot for me. I'm not saying it is for everybody. It's just when I ended managing a big fund and went into a smaller fund, I then didn't have anybody telling me what to do. So I had the opportunity to go to do what I thought was best and what would be most profitable rather than suited the investors the best. And so I feel that I have no skill or ability to forecast 6 months or a year ahead. It's a guess like it is for anybody, but most people don't admit it, but the reality is who knows where it's going to be that far ahead. The short term is very difficult to trade for different reasons. It's difficult, but also you've got the disadvantages of all this power that these institutions have got. But I would head for this area, which I would think is with a horizon of about a month for your holding period, something like that. That's typically swing trading, the trading the ups and downs in a long-term trend. And there you can do that just as well as any institutional trader. You're not at any disadvantage. The size is not a problem. And you've got the same tools as they've got, the same data as they have got. So go where you've got the same level playing field as you're playing in the same level playing field as they are. And I think in some cases you'll be able to do it better than they can.